Awesome, guys. My name is Chris, and I am the Algo Man here on TikTok, as well as over on YouTube as well, guys. And today is October 7th, 2025, and welcome to today's recap of the Nasdaq 100 futures. It's amazing, guys. The year's almost over. It's crazy. All right, guys. So, I wanted to begin by asking you guys a question. So I want to ask you something, all right? How many trades did you take today that felt right, only to fall apart minutes later? Just think about that for a second. And how often do you stare at your 1 minute chart chasing green candles only to get chopped up in cycles you should have seen coming? Yeah, let's fix that, okay? Today's session is about getting out of the noise and locking into structure using the same framework that funded traders, six-figure earners, and prop firm killers inside our Discord are using every single day, okay? So here's what we're going to unpack in today's session, guys, all right? First, the 10-minute chart, this bad boy right here, all right? We're going to use CYMO Pro to see the moment structure begins to bend, the kind of bend that precedes a major push. You don't chase here. You watch here. You plot here on this bad boy right here, all right? Then what we're going to do, guys, is we're going to go ahead and flip everything. Got it over here. This is the previous day. That was yesterday's session right here. This is today's right there. Then we're going to look at this 5-minute bad boy right here. This is where we dial in the cyclic motion. And CYMO, this tool down here, guys, it's set for cyclic detection. It tells you where price is actually shifting. Think of this like the moment when tension turns to action. And then you decide, do you want to drop into the 2-minute or 1-minute chart with PredictMo and nail the exact entry? You can, and that's going to be your edge, okay? Or just ride the swing off the 5-minute setup like a boss. Either way, you're stepping into trades with real conviction, not hope. Oh, and let's not forget, guys, our new volatility indicator, VOLAT, okay, we're going to be displaying that today. It flagged the exact moment price ran out of steam. You want to know when to exit, when not to step into the noise? VOLAT tells you before the stall happens. It's almost like unfair, okay, guys? So we're going to see all of this kind of play in action full circle today. The trickling down of the 1 and 2 minute time frame is going to be your homework today, guys, all right? And I'm going to show you exactly the same exact process I used last month to beat 4 of the featured traders over on Ninja Traders competition, okay? I'm going to show, and it's not a difficult process, but this is a process that you want to master if you're looking at capturing the cyclic component of the swing, okay? This will isolate a lot of the cycle signal to where it matters most, and it'll isolate a lot of the stuff that just doesn't matter. So if you're tired of looking at the 1-minute chart, pay attention, because this is kind of going to give you a framework that you can use when cycle trading on the 1-minute time frame, okay? But today we're going to focus on the 10 and the 5, and it's going to be up to you guys to trickle it down either to the 2 and the 1. That's going to be part of your homework assignment, okay? So, oh, thanks, Vivian. Appreciate that. And the indicator is live, and it's fully active in all of your guys' account. All you guys need to do is install it, and you guys can begin using it, okay? So we're looking at the Nasdaq 100, nope, 33, and this is on a 10-minute time frame. And let's go ahead and get this bad boy started, guys. 5, 4, 3, 2, 1. Boom, here we go. Okay, I'm playing this at 10 times the speed of the market. Hopefully it's not too slow for a 10-minute chart. Might be a little bit slow, but let's just let it play out the way it does. And then once we see a signal, we will go ahead and trickle it down to the 5-minute time frame. That's how we're going to work this today, okay? And we'll see if there's any trades that come out of this. And by the way, guys, today was an excellent day to be in the market. There was a lot of swing for I would say for the good part of the morning. And then after that, it just went into a tight cyclic rotation for the remainder of the day. I've got this set to 10 times the speed of the market, which is more consistent with a 5-minute chart. But we're going to leave it here at 10 times the speed of the market because, I don't want to tinker with this in the middle of a stream right here. All right. So here's what's happening right here on your 10-minute time frame. Okay. You're obviously at the very first bar. You're not going to do anything. You're not going to jump in that. My approach is, I typically don't jump into the market until after 9:45. I want to see what type of structure the market is forming before I make my decision. And if you can tell right here with the new volatility indicator, it's telling you right there, guys, I'm not making this up. It's right here. It's telling you that, hey, price is almost 2 times normal volatility. If normal volatility is 1, and this is at 1.65 on this threshold, it's pretty darn high. Chances are right now, right out of the gate at the open, we have seen these setups I've seen these setups time and time again. What ends up happening is that price tends to exhaust itself when this happens, okay? So that means that there might not be continuation, and it might be a good spot for you guys to start beginning to think about either cutting your position short or completely exiting the position at that point, okay? So that's what the volatility indicator tells you right there, to perfectly flag the volatility spike right here, right out of the gate on the 10-minute time frame, okay? So what we're looking for, and this is important right here, okay? What we are looking for right here on this chart is we are looking for a structural cross of the cyan line, and that's either above zero or below zero. And right now it's all the way up above 0.90 right there. So there's no trade. There's nothing for you to stop and say to yourself, okay, I need to flip over to the 5-minute chart and see what's going on, or even look at the 1-minute chart. At this point, there is nothing but noise on the 1-minute chart, okay? This is where traders go and lose money on the 1-minute chart, all right, guys? So to avoid that in a cyclic environment, and remember, guys, we're talking about a process here that is being fine-tuned to help you capture high probability trades that are cycle trades on your 1 or 2-minute time frame, okay? If there's no signal being generated here by CYMO, why would you even look at the 1-minute chart or the 5-minute chart? It's only going to create FOMO. It's only going to have you, it's going to prompt you to take trades that you shouldn't be taking, and it's going to have you, make more mistakes than you should in the process of you being a disciplined trader. So you don't take any trades right now. You stop and you wait. You let the charts shake out a little bit. And what we're looking for here is we're looking for a crossing with this cyan line, either above or below the zero line. And right now it's above the zero line. There's a very high likelihood, 99.9%, that this is going to cross below the zero line. And then when it crosses below the zero line, we'll trickle it down over to the 5-minute and start fine-tuning our potential entry, okay? But for now, let's just keep an eye on this. It's just kind of bouncing around. There's just noise, and there's nothing else. The volatility indicator perfectly nailed that this was going to be the end of the move to the upside right out of the gate, and sure enough, it was, and the market has just been going sideways ever since on the 10, okay? That's where we're at. So let's just kind of let it shake out a little bit. We got just a few more seconds before we get bar change. All right, we just got bar change. Now you're right here, right at the 10, okay? I mean, right at the zero line. And so you want this cyan line to actually cross below the zero line before you make any decision, okay? It has not crossed below the zero line yet, right there. So, just be patient. And we've got maybe just a few more minutes right here, but this is going pretty quick at 10 times speed of the market. Once it hits 10:30 and it crosses below zero, then at that point, we flip it over to your 5-minute time. There we go, guys, right there. Now you just had a crossing. Let me just pause this for a second. Now you just had a crossing right here below zero. This is the moment where you pause, you look at this bad boy, it crossed below zero right there. That's where you want to look at your 5-minute time frame, not before, okay? This was just nothing but noise. Now you have a structural shift right here that's telling you that price is likely to go down, okay? This is the first warning shot that structurally the market is shifting, and you have to pay attention to this, guys. You can't ignore this stuff because this is what separates real traders, professional traders, from all the amateurs out there, okay? So, what you do is just go ahead and bring up your 5-minute chart, and lo and behold, what do you see here on the 5-minute chart? Okay, let's go ahead and analyze this before we continue with the play feature right here, okay? Here's what you have on the 5-minute chart. You've got momentum going down. You've got cycle going down. But let's analyze what happened before this trade begins to evolve right here, okay? What ended up happening the day before is that you had a little bit of a trend to the downside right here going into the close yesterday. All right, guys, you can't ignore this stuff, okay? You had cycle 1 right there, and you had cycle 2 right there. What ends up following a trend? Okay, this is a trend right here to the downside yesterday going into the close. You normally have a cycle, and this is a cycle. How do we know it's a cycle? Because you have a sine wave formation where momentum is following the cycle signal, all right? And that ends right there, guys, okay? The moment it crosses over momentum, it ends right there. That's the end of the cyclic swing to the upside. And what do you have right here? You have another cycle swing to the downside. You've got cycle going down, and you got momentum going down right there, right? So you have another cyclic swing to the downside, and you're just about to get across right here. So we're going to go ahead and run this bad boy and see what comes of that, okay? So you still don't have a signal here to take any trade on the 5-minute chart. You have to wait for the crossing right here. And ideally, you want to find out if momentum is going to shift and go up? Because if that happens, then you're going to have a cyclic trade. Or is momentum going to continue its trajectory to the downside? So right here, look, we just had the cross. You see this? Let me put a little box right here just in case you guys can't see it, okay? This is what I'm talking about right there. That is a cyclic cross. Now, one of two things is going to happen, okay? One of two things is going to happen. Yeah, we have volatility on the 10-minute time frame. I'll show it to you right now when I bring it back down. There's only two possibilities that can happen here on this chart, guys. Either momentum turns up and this becomes a cycle trade, all right? In which case it invalidates the trade that we were hoping to take to the downside. Why? Because if I bring down my 10-minute time frame right here, our 10-minute time frame is telling us that price is gonna move down right here, okay? So if I want to see price move down, what do I need to see here on this signal? Would it benefit me if momentum moved up along with cycle? In other words, a cycle long trade? Or do I exactly age hit it right there? And so did Samba Barbie right there. You want momentum to sink. You don't want momentum to do an about face and go up with cycle, because then that would completely invalidate what market structure is telling you on the 10-minute that price is going to do. But if on the 10-minute time frame, okay, the market's telling you that it's going to go down, what you're looking for on this chart is you want momentum to sink. You want it to come down, okay? That's what you want it to do. So here you are, okay, and you're looking at this and you're sitting here wondering, okay, is momentum going to rise or fall? Your expectation as a trader is that you want momentum to fall, okay? You definitely want momentum to fall right here, okay, guys? So I'll get to your questions soon, guys. Let me just finish the explanation here, and I'll be more than happy to get to your questions as soon as I'm done with the demo. But right here, the expectation is you want momentum to fall because market structure on the 10 is telling you that price is going down. So let's go ahead and play this, okay? And see where it goes. So you see this right here, you got momentum. If momentum falls below the threshold right here, this might be a good signal for you to go ahead, or even if it goes sideways right here, but let's go ahead and watch it right there. Boom, there we go, right there, okay? Look what just happened right here, guys, okay? You had cycle go up. Did momentum follow up? No, momentum sunk right here, guys, okay? Bingo, all right? And that right there, my friends, is telling you that you have a very strong likelihood that price is probably gonna go down, okay? And if price is probably gonna go down, then you wanna start looking for a potential entry to the short side on your 1 or 2 minute time frame, okay? But let's pretend that you weren't too sure in your decision-making process and that you were kind of new and trying to figure out, all right, well, is this really going to sink or what's going to happen? Let's just wait another bar and see, okay? So you're already here at the 1040 bar. This would be the 1045 bar right here. Once this bar closes, this is going to be the 1045. Now momentum is doing what right here? Momentum is going sideways, okay? And cycle is going up, okay? Let's pretend you're still a doubting Thomas and you're still not sure what's going to happen here, okay? Let's continue to watch it, okay? You've got price at the base VWAP right here, and you guys know these are some of my favorite trades where price kind of takes off to the upside, but now we have confirmation right here that momentum is trending to the downside. Cycle is just kind of doing its little rotational spin right there, okay? This is the 1055 bar right there, okay? This might be a good bar to consider taking a trade because when this comes down right here, it's all gonna come down, okay? That's just the way the cyclic nature of the market works, and especially if you can track it with absolute precision with a tool like CYMO Pro, okay? You already got market structure telling you on the 10 minutes that price is moving down. You came over here, you saw the crossing, you saw cycle go up, but did momentum go up? No, momentum came down. And again, instead of just jumping in on these bars, we said, well, what if? What if? What if? What if momentum jumps up? What if momentum overshot? Well, guess what? There is no more what if. Because if you're right here at like the third bar after you got the signal with momentum sunk, guess what? Chances are this is the early onset of a trend. Hello? What else are you waiting for? If cycle is already halfway up right here, where do you think cycle is going to move? And when it moves with momentum all the way down here, where do you expect price to go? Well, let's find out, okay? If cycle is all the way up here and momentum is all the way down here telling me that price is moving down and I got confirmation on the 10, well, let's find out, okay? In fact, you know what?
Order filled.
Let's take a trade. How's that? Take a short. You got cycle coming down right here. Look at this, right there. And we will let this bad boy run until the end of cycle number 2, guys, okay? Remember, cycle number 1 to the downside began right here, okay? And this is where it's important to understand the cyclic rotation of the market. Cycle 1 began here and ended here. Remember, I've always told you guys, wherever the trend begins, that's typically the end of cycle number 1. All you got to do is look at it, and you'll see the end of cycle number 1 and trace it back to the very, very start of cycle number 1 right there. So if you've got cycle 1 here, you're expecting cycle 2 to do what? To begin when it crosses below the 0 line right here, and then come back up and over the 0 line to completely finish the second cyclic rotation. That is absolutely fundamental, and that's something that no one else is going to teach you guys anywhere on YouTube or TikTok, okay? Everybody else is too focused on ICT trading nonsense and order flow voodoo, okay? This is the real deal right here, guys. This is the only way that you can spot the beginning and the end of a trend and do it with exact precision, okay? And I'm going to show you exactly how it's done right now. So in the meantime, I'll take some questions here from the YouTube channel. Is the 2-minute good for the volatility indicator? It is, but you got to tune it as far as the sensitivity as to whether you want it less sensitive or more sensitive, and just kind of play with the thresholds to see where it spots it. I find that it works really, really, really well on the 1-minute time frame, but it could work just as good on the 2-minute time for that intended purpose. So here you go. You've got the commencement of cycle number 2 right here, guys. That is the beginning of cycle number 2 right there, okay? And this whole trade is not gonna end until you get the crossing with cycle number 2. And we're gonna just let it run so I can show you exactly what precision trading looks like when cycle number 2 ends and calls the bottom on this move. So I got a good question. Should we follow the 1-minute or straight to the 2-minute chart? So if the market is trending, you always use the 2-minute chart, and you use it in conjunction with pure mode to track the pure momentum swing in price. That's the only way you're going to capture the momentum swing in price. If you're only trying to capture the cyclic swing in price, then you go straight to the 1-minute time frame. That's the only variation and the only deciding factor as to which of those 2 charts you want to use. Do I want to capture the trend? You go to the 2-minute. Do I want to capture the cyclic swing in price? You go to the 1-minute chart. That's right. The 2-minute is going to be for trend only, and the 1-minute is going to be only to capture the cyclic component of the swing. And I'll show you right now as soon as this is done right here. So guys, the swing isn't over. If you were looking at capturing only the cyclic component of the swing, your trade would have ended right here within these first 2 bars. But if you notice, the complete swing in price, okay, actually doesn't end until cycle crosses above the 0 line right here, guys. And this is still going strong right there to the downside. Look, okay? Hasn't even crossed. It hit the 0 line, and it's still rolling right there. Oh, absolutely, Orion. Yeah, man, and thanks for tuning in. I haven't seen you here in a while, so it's good to have you here, man. Got a comment here on our YouTube. Ryan saying he got chopped up around 10 a.m., but he did catch the downtrain. This would have been nice to have earlier. Oh, absolutely. Okay, here it goes right here, guys. Let me just blow out of this trade.
Order filled.
Right there. That's where you get out of the trade. Now, let's see what happens, okay, once it bounces around, and see if there's any additional flow right there. That's the end of cycle number 2, okay? And the end of cycle number 2 marks the complete bottom of the trade. And how do we know that, guys? Because I told you 1,000 times that every trend typically has about 2 cycles worth of rotation. And about 35% of the cases, you get a third cycle. That only happens in a very small percentage of the cases. In those cases, you know, price ends at the end of cycle number 2, especially on the 5-minute chart or even on the 2-minute chart, okay? So there you go, right there. Price stalls. That's what's happening right there. Now, if I bring down the 10-minute chart and you kind of want to look at it from a 10-minute perspective, look at what happened right here. You had the entire cyclic swing from beginning to end right there, perfectly caught by the 10-minute time frame CYMO indicator right there. That is the end of the move right there, guys. Now, it caught it a lot earlier. It caught this move all the way from here, all the way down, guys, okay? Now, if you notice the volatility indicator right here, it caught this spike in volatility as price came down right here, and it caught the last leg of it right here before price stalled. Now, look at what price is doing on the 10-minute. It's going up, okay? And that's the end of that rotation right there to the downside, guys. Look at this. This here is on the 5-minute time frame, okay? Perfectly nailed the bottom of the trade. I don't know how many points that was, but that was from 25,184 all the way to 25,023. It was probably, I don't know, you guys do the math. Let me see. That's 25, 184 minus 25,023. That's a 161 point win on the Nasdaq 100, guys. Okay. And that's it right there. There's nothing else left in this trade, guys. That trade is completely done and over with. Okay. And J Momentum was in that trade. Hey, man. Congratulations. That was a beast of a trade right there. Now, you guys need to figure out whether you want to capture this on a 2-minute time frame or on a 1-minute time frame. And remember, there's two completely separate trades that you can capture on either of those charts. On the 2-minute time frame, it's going to be a purely momentum swing type of trade where you'd step into the trade using a tool like PureMo. And PureMo stands for pure momentum, to capture the pure momentum swing in price. But if you're looking at this from the lens of being a scalper or a cycle trader, then you're going to look at this through the lens of using a 1-minute time frame. And the way that this looks on a 1-minute time frame is like this. Let me kind of bring it up because I've got it right here at the bottom, okay? This is how this trade would look like on the 1-minute time frame. Okay, now where I ended up taking the trade on the 5-minute time frame is right here. And you can tell that there's no way that if you would have been looking at the 1-minute chart, you would have taken this trade right here where I entered the trade on a 5-minute time frame, because you've got no signal for at least 1, 2, 3, 4, 5, 6, 7, 8, about 9 bars on the 1-minute time frame. Look, you have no signal that tells you to take this trade where I entered on the 5-minute here on this 1-minute time frame. In fact, your signal doesn't come till about right here. And that's right when you have, this is right when you have Predicmo crossing the 0 line right there, and you have Predicmo going above the 0 line right there to exit the trade. And this crossing is exactly right here at this bar, guys. And that's the end of it. But you don't capture the full swing of the trade. You capture the trade from about 11:02 in the morning all the way till about 11:10. So 11:02 to 11:10 would have been right here. Look, okay? So 11:02 would have been right here at this bar, okay? And it would have taken you till about this bar. So on a 1-minute time frame, you would have gotten in right here, and you would have written it down all the way to this bar right here. That would have been the end of the trade. What you see right here is this, okay? Is this trade right here, okay? And if you want to count, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. For every 2 bars on the 5-minute chart, okay, you get 10 bars on the 1-minute chart. And there is your 10 bars. Hello? Are you guys paying attention? Okay, and that's important, guys, okay, because you're only capturing the cyclic swing in price. And that's how you have this indicator tuned to only capture the cyclic swing in the move in price, which is basically these 2 bars right here. The whole swing doesn't end here. The whole swing ends down here. And CYMO perfectly captures the entire move with absolute precision.
Wow, did you see that? That's what you call precision.
So there you go, guys. That's how real algorithmic trading looks like. I got a question here from Ryan on our YouTube channel. He says, do you trade the NQ most? Yeah, I do. This is the one instrument that I've been trading for a very long time, so I kind of know it like the back of my hand. I know how bipolar and noisy it is. So yeah, I've been doing it for quite a long time in the market. So let's see. I got another message here from Ryan on TikTok. It says, I got in around 10:55 when cycle was going down. And homie, J Momentum is back. Awesome, man. Awesome. Yeah, well, congrats to Orion as well, man. Congrats. That is really, really good, guys. That's how you use the tools. You ride that bad boy all the way to the end. And remember, guys, the 2 charts that you have a choice to use, whether it's the 1-minute or the 2-minute, are going to capture different aspects of the trade. The setup that I'm showing you here happens to be really good if you're only trying to capture the cyclic component of the trade, which would have been these 2 bars right here on the 1-minute time frame, okay? Because if you think about it, look, watch this carefully, okay? I got in over here, okay? And the 2 bars that you would have caught in the trade would have been these. And then you still had a lot more going in the trade. And this is how it looked on the 1-minute time frame right here. So you would not ever have gotten into the trade on the 1-minute here because it was just like chop, 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 and there was no signal. You would have gotten in right here and gotten out right here. But then look what happened. Price reversed, and then it came down, and it reversed again. And this is where I got out of the trade on the 5-minute time frame. So you see how difficult it would have been to capture all of these swings on the 1-minute time frame without having structure guiding your decision-making process. Whereas on the 5-minute, it was just one clean signal all the way through and through. Now, you would have caught a different portion of this swing on the 2-minute time frame. Why? Because it's compressing the bars, and because you're using a tool like PureMo to really capture the full momentum swing in price. So rather than just getting out here, you probably would have caught more of the swing in price, because that's what the tool is designed to do. 2 different tools for 2 different environments. And that's where trader's choice matters. Because if you're only trying to capture the cyclic swing, you're only going to capture 10 bars from these 2 bars on the 1-minute time frame, whereas on the 2-minute time frame, you might capture a bigger swing using PureMo.